Welcome back to REIQA.com Real Estate Education Program. Be sure you started with the welcome video. In this Section 1 video, we will discuss real estate starting out and cover a lot of concepts you need to understand before diving deeper into doing real estate deals. Now, let's begin. If you're watching this, you've probably considered or dreamed of owning your own business or being a full-time real estate investor. You've probably also seen all the invest in real estate with no money down ads and commercials, and maybe even tried one of the programs. Yes, you can start in the real estate industry with no money down, but don't quit your job to do so. What most people don't tell you is to be successful, it still takes money for advertising, locating deals, earnest deposits, down payments, etc. Even if you are using a source of OPM, other people's money, or wholesaling, you will have to spend some of your own money. And many of the most successful people are spending a lot of our own money. Business cards, flyers, websites, bandit signs, letters, postage, etc. are not free. Even fuel, driving for dollars, isn't free. You really need at least enough capital to get you through the first 60 to 90 days, because even if you get lucky enough to find a great deal your first few weeks, it can take over a month to turn that deal into some money. Sure, it can happen faster, but typically it takes a while, especially at first, when you may be depending on help and guidance from other people. If you're going to actually start closing on deals yourself, even if using OPM, you may have to come up with money for earnest deposits, down payments, etc., prior to your funding being approved. I tell you all of that to say, if you are really serious about changing your life, I've developed this simple-to-follow program I personally used to change my life. If I could do it, anyone can. I grew up with a single mother living in Section 8 government apartments, and today I own many Section 8 rentals. When I was in my mid-20s, I hit rock bottom after a startup company I was part of tried to scale too fast and went broke. I had lost everything, was broke, jobless, and even became homeless for a period of time. And after struggling to get ahead for several years, I finally got sick and tired of being sick and tired. So I started doing real estate, and it changed my life forever. 10 years later, I had reached cash flow freedom and built enough cash flow to live comfortably for the rest of my life. But I continue to grow my portfolio at my own pace, while being free to spend more time with family, friends, traveling, or helping other people learn more about real estate and other ways to invest and improve their lives. There's no free rides, though. To be successful in this life, you must be willing to put in the grind. But if you're hungry for success and willing to listen, learn, and put in the work, you really can change your life. Before jumping too deep into real estate investing, it's important to first understand some basic principles of real estate that, even though very basic concepts, are very important, as they will lay the groundwork for everything else you will need to know. To begin with, it's important to understand there's many different property types, and you may decide to only focus on one or two. But you should have knowledge of the others as well, because there's ways to help people and also make additional income, just by having the knowledge. First, there's single-family property. This would include homes, mobile homes, and single-unit condos, townhomes, or apartment units. Any property where individual units can be owned separately. Duplexes with 2 units, triplexes with 3 units, and quads with 4 units are all also considered single-family. Second, there's multifamily property. This is anything with 5 or more units, such as apartments, mobile home parks, or even RV parks. With mobile home parks and RV parks, the owners typically own the land and lease each lot or utility hookup. Next, we have commercial property. Commercial property can be separated into 6 basic subcategories, including leisure, retail, office, industrial, healthcare, or storage properties. Finally, there's land. This can include vacant, occupied, and developed or undeveloped land. Next, it's important to understand all the different ways you can acquire real estate, or the control of properties. We'll go over the general ways here, and go into more details later in the training. Most people start off knowing about a few ways to acquire properties, but do not think of the others at first, and this can cause you to leave potential deals on the table and pass up on being able to help more people and make more money. Please note, wholesaling is not a way to acquire properties. Wholesaling is an exit strategy, not how you acquire property. We'll go into more about wholesaling later. The first way to acquire property is with cash. But this doesn't have to be your own cash. You can use other people's money, or OPM. Next would be bank loans. Of course, this requires good credit and great condition properties to even qualify. The next way to acquire real estate would be private money or hard money. A lot of people confuse these two at first. Private money is just that, private. Someone you know or meet invests money into your deal or loans you money for a return on the deal. Hard money is similar, but these are companies who invest specifically based on the assets and the deal. Similar to banks, but they are more concerned about the asset value rather than your credit. Another popular option is retirement accounts, either by taking a loan against your 401k or investing with a self-directed IRA or solo 401k. I highly recommend looking into investing using a Roth account. The next great option is a joint venture or JV deal. This is where you partner up with another like-minded investor. Sometimes one brings the deal and does the work, and the other is just the money partner. And sometimes both share responsibilities. Crowdfunding has become very popular as another way to acquire real estate. There are many crowdfunding platforms available to invest in deals. Real estate syndication is a great option as you move into larger deals like apartments and commercial properties. REITs or real estate investment trusts are another popular vehicle for investing in real estate. There are also real estate mutual funds and ETFs available where you can invest in real estate. Some other less common ways to acquire properties include assumable loans, subject to deals, and sandwich lease options. Finally, my favorite way to acquire real estate is creative financing using seller financing. This can be accomplished with either a seller carryback or land contract, also known as contract for deed. In order to talk about the different methods of locating deals, we must first look at what is a deal, or what are we actually looking for as real estate investors. You're not just looking for real estate or properties, you're looking for problems to solve, and owners who are considered motivated sellers. So, where do the most motivated sellers come from? The first type of motivated seller would be inherited homeowners. These are people who inherited a property they do not have any interest in keeping and just want to sell as soon as possible. Second would be pre-foreclosure deals. This is homeowners who are behind on their payments at least 90 days and their mortgage holder or bank is considering pursuing foreclosure or has already filed a court case. Next, we have foreclosure properties or bank REOs. These are properties that have already went all the way through the foreclosure process and the bank now owns the property. Another great type of deal is tax delinquent properties. This is where homeowners have not paid their property taxes for at least a couple years. Every state has its own property tax laws. Some are tax lien states, and some are tax deed states. We'll go more into the difference later. The next deal type would be divorce liens. Many times when couples get divorced, they have to sell their property and split the proceeds. Or whoever ends up with the property cannot afford the payments, so they need to sell. Another good lead source for motivated deals is relocation leads. This can happen when someone changes jobs or due to family reasons. Abandoned properties are another lead source, but are a lot rarer to find. Finally, one of the best sources for deals is absentee owners. Some are either owned as a vacation home or rental. And my favorite are properties owned by tired landlords, especially during times when the market isn't doing well, or if you can contact them when they are dealing with tenant turnover. I search for rent ads to find a lot of potential deals and also skip trace the current address of potential tenants who apply for our rentals. Whoever owns their existing place is getting notice their tenant is moving. So, it's a great time to contact, and many are more open to seller financing. That concludes this section. In the next section, we will discuss all the different strategies for acquiring properties. Please subscribe to our channel, like the video, and ask any follow-up questions in the group. Our experienced investors will respond throughout their days to help you. Check out our website at REIQA.com and the links in the description below for more real estate help, tools, and resources.